From Orange County and the campus of Chapman University, this is the Chapman Business Report.
Talking commercial real estate with Randy Mason, longtime commercial real estate expert here in Orange County, nearly 30 years, the founder of Commercial Realty Specialists. We're going to assess the commercial real estate market in Orange County and Southern California. Thanks for joining us, Randy.
You're welcome.
Real quick, I mentioned your background. You've been at this a long time, and you founded the company. How did that all happen?
I've been in the real estate business close to 30 years. I was with a very good real estate company. Decided, I've been doing it for a while. It's time to go out and do it on my own.
And obviously landed or started it in a pretty good place. Orange County, Southern California, back, say, in the 80s, the market was booming, and it's picking up again.
Yeah, the market was booming when I got in, and then it died.
Real estate, a cyclical business. Yeah. Who'd have thought? So let's talk about the market right now. Assess the overall commercial real estate market. Everyone knows it's pretty strong. Some would even say in parts, maybe more Northern California, but even parts of Southern California, there's even a mini building boom going on, right?
That's true. Now, when we talk about the real estate business and, is it a strong market? Well, you have to understand it. Strong for who? The tenant or the buyer? So right now what we're seeing is it's an extremely strong market for landlords with regard to it, or it's getting stronger. They're not offering the same types of concessions that they were in the past. Tenants, unfortunately, they're having to stretch for transactions. It also depends on if you are a larger user or a smaller user. If you're looking for 20,000 square feet and above as an office user, you're going to find very limited inventory out there. So fewer choices. That means that landlords, they don't have to give you the concessions that they used to give. Rents are starting to tick up. They're not shooting through the roof, but they definitely are ticking up. Concessions are going down. We're seeing the vacancy rate for office space in Orange County between 13 to 15 or so, depending on the building, and it can be even less depending on the building, as an example.
I want to talk about some of the factors that are making us a seller's, a landlord's market, but you mentioned Orange County, and that is your specialty. I've heard the Orange County market assessed compared to some of the other California markets this way, that in Orange County, with respect to office, because we'll talk industrial and talk a little bit about multifamily and the other segments of commercial real estate, that Orange County is in kind of the second inning of the recovery or expansion, and that other parts of Southern California are in, say, the fifth inning. Northern California is in about the seventh inning. They've had such a boom with all the tech successes up there. Is that how you see it? And the reason would be, one big reason, is we have had all those the secondary mortgage companies, and they left, when they folded, they left a lot of vacancies.
Orange County, actually, I think we're probably closer to 60 to 70% of where we were years ago. I mean, without a doubt, the market's challenging. It's a competitive market right now. I've got clients right now, as an example, for industrial space. He's looking to buy his own building. Well, unfortunately, we've got like a 4.5% to 5% vacancy rate. It's hard to find a building for him. He's been pre-qualified. There's money available. He just can't find the right opportunity in order to expand his manufacturing business. That's a challenge.
What are the things, so let's going back to the factors that are driving a pretty strong, whether we're talking Orange County, Southern California, all of California, a pretty strong commercial real estate market, demand for industrial space, manufacturing. What are the factors here? I guess the number one would be, you mentioned your client, an expanding economy, strong demand, and that's healthy, maybe compared to, again, 5-7 years ago when it was more of a speculative market?
I think what's happening is the pricing or the wages for Southern California and or California or the United States in general are not so off the chart with regard to wages in other parts of the world. So all of a sudden, manufacturers saying, I could manufacture overseas. However, I don't have that same, and for smaller types of product or run lots, as it may be, you don't have the need necessarily to offshore the manufacturing.
And of course, our proximity to big ports has to help with respect to manufacturers.
Dramatically, yes. Well, for importing product over, that helps our local economy without a doubt, using the two ports in Los Angeles.
My assessment that while the market boomed in all segments of real estate 2002 to 2007. A lot of it was fueled by very inexpensive money and speculators. And now, while it may not have the same numbers, now it's more fueled by expanding, by market forces, by expanding businesses. That's a good thing, right?
That is a good thing, without a doubt. So we're seeing the businesses hire employees. We've seen, if you drive around Orange County, you're noticing probably quite a bit of apartment building. Well, the apartment values have gone through the roof, and investors are looking at ridiculously low returns, 4, 5% cap rates. So all of a sudden, larger companies are building lots of apartment units. Well, so there's been some concern. Okay, well, if all of these apartment units start coming on the market, who's going to be renting them? But apparently, they keep getting rented. So people are continuing to come into Orange County. Our unemployment rate is relatively low. It's not as low as other areas, of course, but it's
5%, though. It's getting pretty strong even relative to other areas around the country. What's the biggest challenge then for commercial developers? Let's say if you wanted to build new. We're going to talk about some recent transactions in Orange County, Hyundai and PIMCO down in Newport Beach. What are the biggest challenges? One, finding land?
I was going to say, yeah, that's the biggest.
They're not making any more of it, as Will Rogers would say, right?
Nope, not making any more of it. Finding land, the entitlement and or the permitting process. Environmentally,
CEQA?
As an example. So it can be very challenging in order to get your project approved.
Where is the balance? We know California, and a challenge for business in Orange County or Southern California is you are in California. Some of the highest taxes in the country, and a pretty stringent permitting or regulatory process. That's not going to change, right? Or is there any hope on the horizon, a relaxing of, say, some of the CEQA requirements?
Frankly, I don't think there's going to be much relaxation. I mean, I'm hopeful that there would be. The reality is, didn't Toyota just relocate?
Sure.
So
but the hope then would be that our benefits, we just talked about proximity to ports, good, strong trading partners if you're in, say, the export, and so you might be in the industrial business, Canada, Mexico, Asia. Those benefits and an intelligent workforce, the other things, would outweigh high cost.
Well, the reality is there are other locations that are not far away from California where businesses do relocate to because of the tax advantages or lack of taxes. Without a doubt, the quality of living is this is a great place to live. If you're an employee and you're well educated, you say, I'd like to move to California. All of a sudden, if you're an employer looking for quality individuals, well, maybe they're not in other states that you would like them to be if they're higher educated individuals.
So I want to go specifically to the office market, because we talked about Orange County being maybe in the earlier stages of expansion or strength of a market. But looking out to 2016, this comes from UCLA's commercial real estate forecast, and they see by 2016, Orange County among Southern California, actually among the California markets, being the strongest, as measured by optimism among developers. Is that what you see? So a few years out, this will be, if they're correct in their forecast, the strongest office market. Again, from a landlord's perspective, an investor perspective, I guess.
Well, definitely from a landlord perspective, rents are slowly ticking up, concessions are ticking down. So without a doubt, we're going in that direction. We're moving in that direction.
Let's talk also about the retail market here in Orange County. I've been covering business for nearly 25 years in Orange County, and I've always heard that even in the early 90s and even now, we're overstored, we're over-retailed. A big reason is cities have every incentive to encourage as many dealerships and malls. They get the biggest chunk of their revenues from sales tax. Is the retail market saturated, and is that a problem?
The more people we get in our wonderful little geography, we're still growing, the less driving they want to do. Therefore, they're not necessarily willing to drive all over the place to go to their particular retailer. Do I think we have too many retailers? You know, not really, because the fact of the matter is I don't want to drive a half an hour in order to buy an electronic item. If it's down the street, okay, great. So now we open another electronics store that's somewhat cannibalizing the other shops, but the reality is I wouldn't really be driving that far anyway.
Right. When we going back, when people talk about California's systemic challenges and what might change things, how would we get, for instance, more affordable housing? So how would we maybe change this situation where the incentives are always less, say, for housing and more for retail, because that's how municipalities get a bigger chunk of their revenues? Could you ever foresee that tax shift, and then we'd get different, say, more residential development and less retail? Could you ever see a seismic change, if you will, in California's structure?
When you have a large density of a population, all of a sudden those individuals they're occupying less square footage, but there are more people. Therefore, they're spending more money. Therefore, cities are generating more tax revenue. So all of a sudden, you're going to see density. You're going to continue to see density happen, as opposed to single-family homes on lots where you've got one household. Well, on that same lot, if it's zoned correctly, you can have 5 or 6 families that are all generating revenue for the city.
Randy Mason, founder of Commercial Realty Specialists, thank you very much for joining us.
You're welcome.